Hello, everybody. Welcome back to Money Conversations with Magical. Today, we will be speaking about investing in cryptocurrency. We will have a look at what it is. We'll have a look at the various types of cryptocurrencies you can invest in. What are the benefits? What are the risks involved? And why it's actually gaining a lot of attention and traction in the recent past. So come with me. So what is cryptocurrency? Cryptocurrency is a digital or virtual currency that uses cryptography as security. It's decentralized, meaning that no government or bank regulates it. And the magic in crypto lies in blockchain, which runs across various, a crazy and very expansive computer network. So what are the benefits that one can get from investing in cryptocurrency? The first thing is that there is potential for very high returns. In as much as past performance is not indicative of future returns, cryptocurrencies in the past have delivered exponential returns. Cryptocurrencies like Bitcoins and Ethereum have posted significant high returns. Due to its nature of being an investment that is not your traditional kind of investment, early adopters have been able to make high returns. The second benefit is that it offers you an opportunity to diversify. You're able to diversify away from your traditional investments that we've been talking about. Diversify away from the unit trust, diversify away from real estate and any other business. So it gives you that opportunity to get returns from a different non-traditional assets. The other thing that makes Bitcoin attractive is liquidity or accessibility. The markets are open 24/7, so you can be able to trade at any time. So with the benefits comes quite a number of risks. The first risk you face when you invest in Bitcoin or in cryptocurrency is that it is very volatile. The prices could come down as fast as they come up. So in essence, you could be having a certain value in your wallet at this point, and within the next few hours, all that value has been diminished. The other thing is the security risk. The wallet stands the risk of being hacked. Remember, we are saying this is an investment model that purely relies on technology. And like we've said, it's digital. It's not money that you can touch and feel. And so there's a very high risk of being hacked. The other thing is that there's regulatory uncertainty. The governments are still trying to figure out how to regulate these kind of assets. And so those are the risks to look out for and many others before you start investing in cryptocurrency. So how do you go about it? This is, remember, a conversation just for beginners. So first thing you need to do is that you need to choose the exchange that you want to use or the platform that you want to use. And you can do this first by researching which exchange is safe. You can use user reviews. Look at people who've done it before. What reviews do they have for that particular exchange or platform? Then the next thing you need to do is you need to set up a wallet. You will need a digital wallet to operate your cryptocurrency. Once you've set up the wallet, then you can start funding your wallet. Once you've done that, then you're good to go. But I recommend that you start small. So a few tips For anyone wishing to get into the cryptocurrency world, the first thing is you need to do research. Do an extensive research on what it entails, because like we've discussed before, the first thing you need to do before you get into any business, research and do a thorough understanding of what you're getting yourself into. The second tip I'll give is that only put money that you can afford to lose. If you have money that you are depending on to take care of your very short-term needs, take care of your children's education, take care of your daily utilities, take care of your other very immediate needs, please do not put all that money in the cryptocurrency. Start small. Put money that you can afford to lose, because you'll say, I've learned my lessons and at least I understand how cryptocurrency works. The other tip is you can diversify. Don't put all your money in one cryptocurrency. You can choose different. You can choose the Bitcoin, you can choose Ethereum, or any other that is in the market, and you can do a thorough research on that. The other thing is you have to keep your key safe. There's a key you get to access your wallet, so make sure that you keep it very safe, because if someone gets access to that key or that code, it's very easy to open your wallet and access your funds. So ladies and gentlemen, cryptocurrency can be an ideal way to diversify your investments and make some gainful returns, but it's important to understand the risks that are involved, because it's a very high risk kind of investing. So as long as people believe in Bitcoin, it will continue to have its value. But one day that people stop believing it, then it could essentially, in theory, mean that Bitcoin could collapse to zero value. This is because it's a very sentimental kind of an investment, and so the market largely depends on what people are feeling about it. So it's important then to understand, even before you start investing, that this is a very high risk. I repeat, it's a very high risk venture, and you can only get into it if you understand your risk profile. Once again, we've spoken about risk profile or risk appetite before in the previous videos. So if you're not the kind of person who can handle a situation of losing your money, please do not put your money there, unless very small amounts that you want to use to learn how it works. Thank you so much always for looking out for these videos, and I look forward to seeing you in the next video.